Hello everyone, this is Juan Sarmiento and today is Friday, July the 2nd. Here is a list of the candidates that I have in mind for today. I don't know that they would fit our requirements, but I would like to take this opportunity to show you my thinking process, okay? Let's put them in alphabetical order and start with Adobe, okay? And I could tell you why I chose it. And the first thing you notice, if you take a daily chart, let's see, there. This is the volatility skew. As you can see, is in a 52-week low, which is good. Okay, let's put. I'm sorry, that's not the. Let's put the daily chart so we can see the. Yeah, it is near the 52-week low, and the stock, of course, has been very, very hot. And now what happens is we could have a strong decline with a spike in volatility. It might continue on and give us another surprise leg up. Okay, so that looks good. Do I have this? Let's go to the Analyze tab, and I don't have any. So I'm proposing this. Okay, let's see if this will work. I'm going to buy 2 October's straddles at the strike price. Well, we can do 190 because it's trading at 190 right now, 590 that is. Let's change the strike price to 590 because that's where it is actually trading at right now, and we want it exactly there. And we have October, which is, if you take a look at October, is 105 days from now, so it's more than 90 days. In the short, we can take July 30, which is 28 days to expiration. Okay, you could afford to do a different one. Instead of July, you could say the 30th, you could say August 6th, and that will be a little more than 30 days from now. Either one of those two will work. And okay, let's choose this one here. Okay, let's take a look at the chart. We can see that they beat expectations by a wide margin. That is important for me, and I think it would be for YouTube, and that's why we have this big spike since the earnings. It was before the earnings, and after the earnings it continued on higher. Okay, that's good. Then you compare the front month options to the back month options. All very good, but look at the price, 96. If we did just the one, it would be more than 10% of our account, because we are here at 88. So it needs to be 8,800 at the most, and this is way more than what we. If you say confirm and send, it will give you the amount 9,600, and it shouldn't be more than 8,800. Okay, we might still enter it because it's so close. Okay, but that's not what the rules say. You can violate the rules a little bit, don't violate them by much. Okay, so I'm gonna put this on hold because otherwise it looks really good. Okay, let's say if this is the best I can do, well then I would enter the trade and put a little more than I would, but it's not a whole lot more than 10% on my account. Let's look at this ALEC, and you can see that the stock also has been going up today very strongly. In terms of percentage, let's put the percent. How much has it changed? You can click here and say control. Oh, here. Click here and say, oh, wait a minute, here. Customize, that's what I want. I want the percent change, that's what I want. And let's put it, move it up a little after the next change. And you see what the change is, almost for ALEC is 48%. That's a huge change. It went from 21 to 33. Okay, that's a huge change. But the volatility is quite high, 1.2%. So you would not want to trade this. Absolutely not. You need the volatility to be down here. Instead, it's up here, more than 100%. So forget it. That's not a candidate. In fact, I want to do a race from memory here. Okay, let's go to the LAX. And this one also quite big, but to look at the volatilities here at 45%. That even though it's relatively low for this stock, is still too high. And this is usually what happens when the stock is not that common and not commonly traded. So again, we are somewhere in the middle here, and it's 45. We need it to be at the most at 30% or something. So we don't want that either. So let's delete that. Okay, let's go to CarMax. CarMax looks good. It has a volatility that is pretty low, and it did move with their excellent earnings. They beat expectations by a wide margin. So this looks better. Okay, so I'm going to make a note of it. CarMax is still my candidate here, and I will see if it's worth doing. Then we look at the Genie. Also very weird volatility here. This is not a popular stock by any means. It's not traded widely, and so most of all earnings are coming up this month, so we don't want to anticipate too much on that. So not my favorite trade. And finally, space. This is Virgin Space, I think. Virgin Galactica. Okay, this is again very, very high volatility. We can't trade this as much as I would like to. We want stocks that have low volatility, not high. Okay, for that kind of thing, if you are interested in trading the stock, you can try something like a diagonal, but that's my subject for another video, not for this one. So okay, so we have Adobe, which is a little higher than I would like to, and then we have CarMax. Let's take a look at CarMax. Do I have a trade? Yes, I have a proposed trade here, and I'm gonna copy this. Control, Command. Command is what I need. Copy trade, and then I take it to my Excel spreadsheet. In this case, now I have a numbers spreadsheet. Okay, let's paste it here. And I could do 3 of those, okay? 3 short straddles and 6 long straddles, okay? The cost is $26.80. $26.80 times 300. Okay, that's cost me $8,040. Okay. Now the expected earnings was $165, and the actual was $263. That's beat by a wide margin, more than 63%. We like that. Okay, next we're gonna see the volatility skew. That means the front month calls and puts have a volatility that I'm gonna enter here. That's the front month calls and puts, and here's the back month calls and puts. Let's take a look. Okay, here we are, and we could write this down. Okay, the front month 27.96 and 29.96 versus the back month 31.94, 31.72. If it changes a little, don't worry about it. It's not that big a deal. Okay, let's go back to the spreadsheet, and here we have the back month. Back month, I said 31.94, 31.72, and the front month 27.96, 29.96, and the difference is 2.87, almost 3%. Below 3% is acceptable. Okay, let's go and see the price. The liquidity is the mid versus natural. So then I go back to my sheet here, and then I said create duplicate, And then here I see my mid and my natural. That's important because that determines the liquidity. Okay, so the natural is 28 and the mid is 26.25. If the difference is not more than 3%, we consider it liquid enough. Okay, so let's come over here. 26.25 versus 28. That is not liquid enough. Okay, all right, so we have one not so good, do not trade, but I have trade and trade. So I'm motivated because the earning beat was so big and the volatility skew is not too bad, but it's not liquid. What that means is that we're going to have trouble getting in and getting out. That's all. But perhaps if you're motivated enough, you're willing to do that. Now, if the current IV percentile is more than 15%, then forget it. I'm not going to do this. So let's go back to here and say, what is the volatility skew? You go to the trade tab, enter KMX and scroll down, and you would see it says current IV percentile 8%. Okay, so we can put that in here, 8%, and that's acceptable. And then the verdict is, I will trade this, right? Even though it has low liquidity. And let's go over here, let's go to the Analyze tab again, and here's my trade, and I'm going to do 3 lots because that would add up to less than 10% of my account, but not more. Okay. Create duplicate or confirm and send. And here it is, and I'm going to add 2 more lots, and that's $8,000. Send that off, and then I'll keep watching to make sure that it gets filled. Immediately. So it wasn't that illiquid, was it? Interesting. Okay, let's go to the Adobe, and I decided let's do that. Okay, even though it's not perfect because it's a little too much money. Analyze tab, add simulated trades, Adobe. Where did it go? It disappeared on me. Or was it? I'm pretty sure it was Adobe, wasn't it? Or did I show you Nike? I'm confused now. Okay, let's try and enter it again anyway. Okay, let's go to the trade tab. Misspelled, ADBE, that's what it is. I was looking at the wrong stock. Let's go to the Analyze tab, and here's my trade. Okay, that makes sense. Okay, 96, 95. Okay, let's enter that. Create duplicate, confirm and send. Okay, let's enter it. If you think you don't want to do it, it's too expensive, that's fine with me. I realize that that's a big no, but I'm thinking that we are just a few $100 above what I should be trading. Okay, in cost, that is. All right, let's go through our positions here, current positions, because there are some trades that need to be closed. Let's go to UPS, and let's show the risk graph. This is expiration. The next expiration is on the 23rd of July. Plenty of time for that to happen. Let's go to PYPL. Same thing, 16th of July. That's 2 weeks from now. I don't need to change anything. And this is simply lottery ticket. It's simply there. I couldn't get any money out of that unless the stock dropped more than $30 between now and July, and that could happen, but it's not likely. Okay, all right, let's move on to Nike. Yeah, Nike, we're doing well. The expiration is July 23rd. No need to do anything on that. Lowe's, okay, Lowe's now here, we have expiration of the short next week. And yeah, as you can see, there is very little value except for this long call here at 200. This short call should be covered, and we could do that and get 2 cents out of that, or you can do it for $0 in order to close that. Let's do for 5 cents. I just want to close it, otherwise we end up with the short stock. That's all. The put, we're going to get 4 cents out of that, if at all, anything at all. Confirm and send. And that went away rather quick. The 200, the stock is trading at 196, and we have these 200 calls. The stock is higher today. You could transform this into a vertical by selling the 205 if you wish. You wouldn't get much money out of that. I'm going to get out of it. Okay, so now we end up with this calendar. It's quite bearish, and we wouldn't get much. It's like a lottery ticket right now, but I don't want to end up with the long options, I'm sorry, the short stock. We wouldn't want to end up with that. So you could, no big deal, but I just as soon get out of it. CarMax is the one we just entered. It's looking good. IBM, okay, IBM here, we need to get out of it too. And I just have to get out of the call portion and then the put portion. Okay, let's see if we can get out of the call portion. Confirm and send. And that's, as you can see, yeah, it was a ratio calendar. There were more long calls than short calls, and now we close the put and get a little money out of that. Then we have GS. The IBM was completely gone. That's fine. It was removed from my list. GS is, if you see what we have here, it's a calendar. Okay, and we're gonna get 31 cents from it. All right, and this will last one more week, 9th of July. If it doesn't fill, it's no big deal. Okay, but I show you one trick to do because we have still 1 week. Facebook, this is doing well too. As you can see, okay, it's going above the smiley face here. Okay, that's cool. So what we can do is roll up one of my calls. Analyze rolling. What that means is only one, because we have two shorts. I mean, one short, two longs, that the difference is one. That's the outstanding call, which is a long call, and we're going to move it up so that we're going to sell the 130 call, and we're going to buy something higher at a strike price closer to the current price, which is 355. And that way we get a little money back. It's a way to take profits. Make sure that it's the same expiration, which is August. And that turns it very bearish. But if the stock continues higher, much higher, we would get money again. Okay, so that's, let's, okay, the GS has now disappeared. And I place my Facebook. Now that's, I took my profits, and that's good. DHR, this is below the smiley face, so we don't need to change that. And this is July expiration, July 16th. No need to change anything. Adobe is the trade that I'm expecting to get filled. Let's go back and see what we can do. Okay. let's change this. Oh, I'm bidding 96.85 and the actual mark is a little below it. So guess what? If it doesn't fill, that's fine. If it fills before now in the close, that's fine too. Okay, so let's assume that it might or might not. Okay, it's well above what I'm bidding is well above the current price. That's not good, but it is what I bid originally, so I should be happy if it gets filled. Okay, and that's all there is to it. That's all for today. Thank you very much for joining me, and see you next time. Bye bye.